Morning, everyone. Great to see you here and everyone online. And this morning, I'm going to just do a session on a bit of a regulatory update and a few key takeaways from that. So, for those of you that don't know me, haven't worked with me before, my name's Andy. I'm a relationship director in the team. I've worked in the sort of charity education sector for over 20 years as an audit assurance specialist. I'm also a member of the ESFA Auditors Forum, so that's really helpful, having sort of a direct involvement with the ESFA and kind of early warning about some of the issues that they're dealing with or thinking about. So I can hopefully bring some of that through today. I'm also chair of an academy, chair of resources at an academy, so bring that other side. And yeah, one day hopefully I'll get on MasterChef, but there's probably a bit more work on puddings that I need there. Right, so what we're going to cover today, I'm going to do a real quick sort of what we've seen over the last year, where are we heading in the sector, and then more importantly in terms of the key regulatory update is a little bit of a recap on last year's handbook, or this year's handbook, Academy's financial handbook, because that's what everyone's currently working to and what we'll be auditing to in a way this year. But then to come on to obviously the key changes under the new Academy Trust Handbook for 2021. And then a little bit of update on a few other areas where I've seen some new changes and updates. So just useful to let you know about those. So what have we seen over the last year? Well, I don't know that those of you that remember Get Smart, I was quite a fan of Get Smart as a young lad in Australia. So control and chaos. That's probably what the last year has looked like, a bit of control and chaos. I was listening to a podcast earlier this week from a couple of CEOs of some larger MATs in the country, and they were talking about the difference between COVID-1 and COVID-2, or lockdown 1 and 2. And I think lockdown 1 was very much that sense of a bit of chaos, because suddenly it was there, adapting to online learning, making sure we had the infrastructure there, remote working, hybrid models, what are we actually doing? Whereas by the time lockdown 2 came along, it was a lot more organised, a lot of that infrastructure was in place, a lot of that organisation was in place, and we'd all done it once before, so it was much more in that control category. But a lot of issues schools have had to deal with, as I said, with remote learning, IT infrastructure, curriculum development, hybrid working, and governance as well. And obviously the financial impact that COVID has had on schools. So that's kind of what the last year's been like. Where are we headed? Well, I think where we're headed, pandemic issues aside, is just really a renewed focus on academization. And that was really spelt out quite clearly by Gavin Williamson in his speech earlier this year. And I think a lot of what we're seeing with the changes in the handbook, a renewed focus on governance, much greater focus on governance and building strong MATs, because I think that the DfE really see MATs as a way forward, best practice. I think what we've seen through the pandemic is that they feel that, and we've seen it as well, that MATs have been able to adapt quicker, particularly in terms of governance. Some of the curriculum development, how they've rolled that out to their schools. So really, I think that's what we're seeing, is that continued focus, continuing to see mergers and amalgamations across the sector, and more collaborative working as well, between trusts, CEOs, trustees as well, because we've all been grappling with the similar issues together. I think we'll continue to see more closures and rebrokerages as part of that academization, and I think what we're also seeing is an increased willingness of the DfE to address sort of underperformance in particular schools or trusts, seeing more schools or trusts forced to close or rebroker their schools or merge with other trusts. We're seeing that, and I think that will continue. And I think the key lessons we've learned over the last year is certainly about remote working and adapting that remote working, including governance and the hybrid models going forward. I know in the corporate sector and us ourselves, adapting to a hybrid working model is a lot easier for us. I think there are challenges in schools of being able to do that, particularly with teaching. But there's still opportunities there, and I know some MATs are very much moving to that, a more hybrid model. Certainly investment in IT is a big issue, or has been a big issue in some trusts. And I think there's the impact that is going to have on budgets going forward, as you need to continue that investment in IT, keep refreshing, keep the infrastructure able to cope with it. Collaboration I've talked about, and also the geography is an interesting point. I think with a lot of MATs as they've grown, and particularly expanded between geographies, there's always kind of been this belief that a hub model was the best model within that geography. And I think, hearing some of the trust talk is that actually what COVID has shown is that maybe you don't need that hub model. You can actually still have a geographically dispersed trust, but because of remote working and the technology and how we've had to adapt during COVID, that actually that's broken down some of those barriers. So I think that would be interesting to see how that evolves across the sector. Right, so that's where we're headed. So in terms of the handbook, Academy's financial handbook, as it's currently known, so that's the document or the handbook that everyone's working to at the moment, and that's what we'll be effectively auditing to particularly when we do our regularity audit. So what I just wanted to recap was on some key points out of that from last year. Not all the changes last year, but some of the key ones, and particularly the ones that are probably more relevant and more of an impact for your end of year audit. So first one was just about employees. From March 21, employees must not be members anymore. So this particularly affects any trust with older articles. What you'll need to have done, if you haven't already done, is certainly make sure you refresh those articles, and particularly if you do have any employees and members that they have stood down from that appointment. The accounting officer, senior executive leader, and CFO, the SFA's preference there is that they should be employees, like they shouldn't be off payroll, they shouldn't be contracted. But if you do go through an off payroll arrangement with one of those individuals, you've got to get the SFA's approval on it or not. So if you are in that position and haven't had the SFA's approval, I'd certainly suggest going out and getting that in retrospect before the year end and before you approach the audit as well, because otherwise that can present an audit issue. And I think the last point there, just around trustees' responsibilities on going concern, a real key thing there is just, that was one of the changes, emphasising trustees' responsibilities for ensuring going concern of their trust. And just to add, that's not our responsibility as auditors. Our responsibility is not to say whether you're a going concern or not. It is the trustee's responsibility. It's your trust. You've got to consider the information, look at the forecasts and assess yourselves. Are you happy that this trust is a going concern, and why? Our job as auditors is then to look at that, challenge the assumptions, review the forecasts and challenge the trustees as to whether we agree with that conclusion. So a lot of the going concern information, it's not prepared for us, it is prepared for the trustees. In terms of some of the key financial control changes last year that are particularly important for the year end, must have a fixed asset register. That's a common issue we do see in trusts, not having a fixed asset register. So it is important. Risk register, making sure that's reviewed regularly and at least annually. So again, that is something that we look as part of the audit, look at the risk register, what are the key risks, how's that being reviewed and refreshed each year. And also the 3-year financial forecast, it links in to the point I made about going concern. That's a key piece of information and evidence supporting the trustees' going concern review, assessment and statement. We'll look at that as part of the audit as well. So again, important to ensure that you're preparing that and submitting to the SFA. And just on executive pay, again, it's a must now. So it's something we will look at in the audit to see that if you do have executives with remuneration more than 100,000, that information has to be published on the website. Some other key changes last year, relevant this year, I think it's got to have a mention about internal scrutiny. Last year there wasn't too much tinkering with internal scrutiny other than to emphasise it should cover financial and non-financial controls. Previously it had very much a financial focus. Last year was to say it should encompass non-financial controls. And I think, that's an area where I think there's probably most change in the sector. We're seeing more of our clients starting to look at more non-financial areas with their work this year or over the next year or two as part of the 3-year plan, and moving more away from just the financial ticking and flicking, so to speak. And I think, again, that echoes Baroness Berridge has certainly emphasised that she sees internal audit as important as external audit now. So I think that there is a strong focus on that. So making sure that with your plans, if you haven't done any non-financial areas this year, fine. But I think making sure that you're building that into your plan over the next 2-3 years, it should be informed by your risk register and looking at that. And I think you'll see with some of the changes in the new handbook, emphasising some of the non-financial responsibilities of trustees, it links to that as well. Just with the point about remembering to submit your report to the SFA, a bit of anecdotal feedback from the SFA is they think a lot of the annual reporting last year was a little weak. So again, just making sure that if you're preparing your own report, that is covering the full remit of all the work that you've had done in the year and not just extracts. If you're using us to produce that report, we'll produce a fully compliant annual report for you. Right, that was sort of whistle stop of last year's handbook and just some key points to focus on for this year over the next 6 weeks. Right, the new handbook, or Academy Trust Handbook, as it's now called. So first thing is obviously the change in name. It's now the Academy Trust Handbook, not the Financial Handbook. It does still reference to the Academy's Financial Handbook, and that is an important point because existing articles, existing funding agreements, and all your policies and procedures are going to refer to the Academy's Financial Handbook. So by keeping it in the name or reference to that, you haven't got to go out and change your articles and funding agreements and policies. You can keep what you've got in place because this still references to it. I think in time, maybe next year's handbook or the one after, that sort of reference to financial handbook will drop away. So you will need to adapt and update your policies and procedures and things in time, but you haven't got to rush out and do that by the 1st September. So again, with this year, there are more musts. The musts seem to increase year on year. And I think a lot of the changes this year are around governance. And I think I talked about earlier that where's the sector heading, increased focus on governance. And I think the new handbook really does reflect that. So let's dive into what's new. So what's new? Governance changes. With members, there's now a must around ensuring that any of your members and any prospective members are not prohibited from being members. So that means being under a Section 128 direction, which will mean that they're being prohibited because of a criminal conviction or corporate conviction or just deemed unfit by the SFA or DFE because of maybe another Academy trust failure or something like that. So again, making sure you've got a process in place from September onwards to check your existing members and certainly check any prospective members. Parent trustees, this is only a should. It's been an issue that's kind of debated across the sector. Should we, shouldn't we have parent trustees on the board? I mean, personally myself, I'm a trustee at a school and we have parent trustees and they're invaluable, and not because they're parents. Actually what we've brought them onto the board for is because of the skill set they've got. They happen to be parents, but they're there because of the skill sets. And I think that's the important thing. From March 2022, there's now a new requirement around appointing a senior executive leader as a trustee. When academies first started, most senior executive leaders or accounting officers, CEOs, were trustees. But ESFA has a strong preference about employees not also being trustees, and that extends to your CEO, senior executive leader. So they've now brought in a requirement that the senior executive leader can only be a trustee if the articles allow it, if they agree to it, and the members approve it. So we've seen in a few of our clients that actually some CEOs, senior executive leaders, actually stepping back from the board role. It provides the right governance structure as well, I feel, and that's what we'll see doing. Where there's changes in a senior executive leader because of a retirement or leaving the trust, the handbook's now brought in a point about consulting with the DFE or RSC about that. The skeptic in me is that that's the DFE's angle to open up a discussion with you about, well, what's your succession plan? What's your vision for the trust? And actually now with that senior executive leader leaving, maybe it's time to join another trust. So we'll see where that one goes. But it's not a must, it's only a should. A few other governance changes. One which is important, particularly from an internal scrutiny point of view, is about your audit committee. Just setting out there, again, to ensure that there's the right independence in your governance structure, that your chair of trustees should not also be the chair of the audit committee. And then if you do have separate audit committee and finance committee, again, ensuring that there's the right segregation of duties in those responsibilities, that the same person doesn't chair both committees. So again, just something to think about with your structure in terms of reference from September onwards. Continuing the governance theme is external governance reviews. Again, the ESFA just, I guess, expressing their view that they think an external governance review is more effective than a self-evaluation. Not every year, but just periodically. So just something to factor in. We've done some governance reviews as part of internal scrutiny. Some organisations have used their SRMA reviews, which have focused on elements of governance as well as part of that sort of external review. With it, I think it's important to make sure that it's not just an audit to come in and look at skills, but it's an actual review of what is your governance structure, how do you operate governance, how do you induct and train your governors, all that full remit. In terms of key control changes, a bit about scheme of delegation, now requiring that you must approve a scheme of delegation. All trusts have them in place, but it must be approved, which means you're going to have to ensure that your board of trustees has approved that, and that it should be at least reviewed annually, or where there are changes in structure. So I think with that, new academic year starting in September, that's the time to just make sure that you've give it a refresh if you haven't, and make sure it's formally approved. One of the things in the new handbook as well was about key documents that must be retained and made available if there's a request for it, and that's meeting agendas, minutes of meetings, supporting documents. And this is one that there's a bit of confusion. A lot of trusts publish this information on their website thinking they have to. Well, you don't. You don't have to publish minutes of meetings on your website. Some trusts do, but you don't. You just have to make sure that you've got that information retained, easily identifiable if there's a request for it. In terms of off-payroll arrangements, Glen will talk about this a little bit in his session on the accounts direction, but again, with the executive pay reports that you have to publish on the website, now if you have any off-payroll arrangements where those off-payroll arrangements are greater than 100,000, you need to incorporate that into that executive pay disclosure as if they were an employee. Other key changes, not too much on internal scrutiny, so I'll duck over that one. Exit payments. So you'll be aware under the handbook currently, if you make any non-contractual severance payments more than £50,000, you have to get the ESFA's approval of that. This has now gone a little bit further, where if you're making an employee exit payment and there's a severance payment within that, and the total exit payment is £100,000 or more, you must get the SFA's approval, and or if the employee is earning more than £100,000 that you're making that exit payment to, you also need the SFA's approval. So I think it's just making sure that you've got the processes in place in your trust to know, capture that information and ensure that the SFA's approval is obtained. Typically this is going to be at CEO level, CFO, maybe executive head in a school or something like that. Not too much else there. Key points, you've got those on the side. I'll just duck over a couple of those. This cyber crime is a really important one to mention, because I think we've seen through the pandemic a lot more cyber attacks on schools' trusts. So the SFA have now built into the handbook a must around trusts must be aware of the risk of cybercrime and ensure that they've got appropriate controls in place. So what we've seen a lot of trusts in response to that is dealing with that as part of their internal scrutiny this year, having cyber security audits, IT sort of infrastructure audits to make sure that we've got the right infrastructure, but also it's cyber secure. Also, if you are hit with any cyber attacks and therefore there are cyber ransom demands, you have to obtain the SFA approval before paying any of those demands, irrespective of the amounts. So again, I think cyber risk should be on your risk register now without fail, and looking at what are your mitigating controls. And last point, again, just encouraging trusts that you should be retendering the external audit every 5 years. I mean, in reality, that's what we see. Most trusts tend to retender every 3 to 5 years, and there's a few ways you can do that through frameworks or running your own exercise. But it's good practice. Right, so that was the 2021 handbook. What I just wanted to cover now was just a couple of other items, I guess, sort of, regulatory updates or changes around regulation that I just thought is worth flagging for you. So the first one, revised articles of association. The DfE have recently updated the model articles of association for academies trusts. There are no major changes in any of those. The main things is a bit more emphasis around governance and members' duties. But I think and a lot of them align to some of the changes in the new handbook. I think the key thing I'd make there is just the second point is that it's not mandatory. You don't have to go out now, tomorrow, 1st September, adopt these new articles. But the DfE will use certain changes in your trust, particularly trust expansions, to drive you to adopt these new articles. So if you're bringing in new schools or maybe merging another trust with another trust, they'll encourage you to, now's the time to refresh your governance and adopt these new articles. So just something to be aware of. Following on from the articles, or not following on, precursing the change in the articles was some changes in the model funding agreements. Again, not major changes, more sort of tinkering around the edges, I guess. But again, the DfE will encourage you to switch over to these new model funding agreements in certain situations. And again, changes in structures of the trust, new schools joining, mergers, age range or capacity changes, and also if you're adopting new articles. So again, just to be aware that you may get some focus from the SFA about, doing both articles and funding agreement. Why you might also consider the funding agreement, the new funding agreement, is SIF applications, because it's a bit of a lottery sometimes, the SIF applications, and getting as many points as you can gets you up the scale. So strong financial governance and management gets some extra points, and if you've adopted the model funding agreements, that will potentially get you some more points in your applications. DfE Standard Chart of Accounts. DfE have been making quite a bit of noise about the Standard Chart of Accounts and doing a lot of work on that as part of their Better Financial Reporting program. So I just thought I'd mention that. I mean, really, it's about standardising the reporting across the sector, which will hopefully provide more meaningful information back to the sector around benchmarking, the value for money information tools that are available as well, and hopefully also make the DFE consolidation exercise a little easier. There's also an advantage to trusts in terms of automation. So if you've adopted the standard chart of accounts, there's a way of uploading that information to your annual accounts return and your budget forecast return to auto-populate a lot of the information in those returns. So again, should make your life easier with that, or if we're doing that for you, make our life a little easier in preparing that for you. I think importantly to note, it's not mandatory to adopt the chart of accounts. It's not mandatory, you don't have to. EFA are strongly encouraging it. Will it become mandated in the future? ESFA say no, or they don't categorically say no, they're just saying we're encouraging everyone to adopt it. So again, the skeptic in me thinks it could be mandatory, but maybe 2 to 3 years. I talked about automation, what the advantages there will be. I've listed there sort of very quickly pros and cons of why you might consider it or not. I think if you are considering it, it maybe is an opportunity to rationalise some of your nominal codes, eliminate inconsistencies across schools and the trust if you are a MAP, and obviously there's that automation benefit. There will be a cost of it, a software cost and maybe a little bit of a training cost as well, but that could well outweigh the extra cost in preparing the AAR returns going forward. A few key considerations, but I think the main one is talking to your software provider. Most of the software providers at the moment have adopted the standard chart of accounts. So I think talk to your software provider about what are the options, what are the database options for you, what are the costs involved. And in terms of the timing of doing it, the best time, and in my view, the only time is to do it for the start of an academic year. You don't want to change system mid-year, so do it so you can start from September. Last couple of things, suitability checks from chairs. This came out July 2020, so not too long ago, and it's about completing a suitability check on your chair of trustees. So it's something you've got to submit to the SFA for the SFA to assess whether they believe your chair is suitable, right experience, right sort of background. So you must complete this for any new chairs being appointed. So if you have recently appointed a new chair or are about to appoint a new chair, you do need to do that check. If you haven't, I'd suggest doing it quick. For existing chairs, whilst you don't have to go back and do it unless they were appointed recently, but if they are coming up for reappointment from the beginning of the next academic year, then again, you should start doing it, particularly if they weren't done as part of the original process. And then last point was just around executive pay. Again, it's been a hot topic in the sector for a number of years, and executive pay benchmarking survey is just being released by a company called Expert HR. So they're running this survey for a couple of months. If you want to participate in it, basically what they'll then ask you for is various information about your trust, size of the trust, number of schools, number of pupils, demographics, needs, all that sort of thing, role of your executives, teaching time, non-teaching time, all that kind of stuff. It'll go through independent analysis, and from that they'll ultimately provide findings, but then ultimately a bit of a benchmarking service. So I know this has been challenges with some clients, particularly where they've grown as a MAT, and actually the head teacher has gone from head teacher to executive head teacher to CEO, and they've kind of moved beyond the standard scales within the teacher scale. So it's kind of, they've grappled with, what do we pay our CEO now? So hopefully this survey really will inform that and provide a really valuable benchmarking exercise. If you want to participate in your trust, all you have to do is use that email link, email them to register their interest, and then they'll take it from there with you. And that was it. I think I'm probably over time, so I don't know if we've got any questions, but thank you again, and yeah. see you through the year end. Thank you.
We have one
Thanks
question.
very much.
We do have one question. I think you might be able to get to. This came in a little bit earlier. It was external governance as opposed to only self-evaluations. Does this relate to internal scrutiny and or SRM-SAT? That's from Caroline.
Yeah, thanks, Caroline. Yeah, I think certainly the external review of governance, that could be done as part of your internal scrutiny. We've certainly done some of that work for some of our clients in the past. And I know other trusts have certainly used internal scrutiny to deliver that external governance review. So absolutely. The SRMA review, I think if that's what the reference to was the SRMA review. I don't know whether you could strictly use that as a form of your external governance review. Potentially, it depends how well they've delved into governance. I've been on the end of an SRMA review myself, and I'll probably be polite about it. It was fine. But others I've seen out there have actually been really good. There've been some really good, and I know Phil's had one recently, and I think that was a really, really valuable exercise. So I think it'll depend on the remit, but again, it's probably something that you could use for that as well. Great, that's me. I think I am now going to hand over to Helen, who's going to talk to you about the world of VAT.
Great to see a handful of you here in the room and a much, much larger handful of you online. Hopefully the technology is still holding up well. So just a quick introduction. I'm a senior manager here in the team at Cooper Parry and specialise in the not-for-profit and academy sector, among one or two other things. So my talk today is going to cover three main areas. Start with some relevant updates on things that have affected the VAT world and the academy sector in the sort of recent year or so. A reminder of some of the key risk areas that academies should continue to make sure they're fully on top of. And then finally, a mini case study, just to give some cautionary tales around things that we've seen for an example client recently that might be worth noting. Okay, so starting off with Making Tax Digital, or MTD. Now, hopefully, everyone who is already VAT registered is aware of this. To start off with when it applies. Now, if you are compulsorily VAT registered already, MTD is already now currently in force. It was brought in over a staged approach, and HMRC allowed businesses that are VAT registered to have a soft landing period, but that ended from the 1st of April 2021. I'll come back shortly on what I mean by the soft landing period. If you are an academy who is only VAT registered on a voluntary basis, you still have a little bit longer to get your house in order around this. MTD for you will apply from your first VAT period starting on or after the 1st of April 2022. Now, in terms of what the requirements of MTD are, they fall into sort of four main brackets. So to start with, all business records must be maintained digitally. Now, I think we're finding that one isn't particularly much of a burden for the vast majority of businesses and academies out there. Not many people are still working in paper and hard copy returns anymore, but nevertheless, it is a formal requirement now. The changes start to come more towards the next bullet points. So VAT returns must be submitted to HMRC now using API-enabled software. Now, what that means is there's two ways in which you can do that. Either you can go for a fully integrated software platform whereby your VAT return is populated within the platform and then uploaded to HMRC, all within the same set of software. Alternatively, HMRC do still allow businesses to populate their VAT returns through Excel or similar spreadsheets, but then the submission of the finalised return must be done through bridging software. So if you didn't want to go the full hog and have your VAT return submitted through software, you've still got a slightly scaled down version. Then the final requirement, and this is the kind of the biggest change that we found, is that you must have digital links between all of the data which informs the VAT return. Effectively, what we're saying here is that manual intervention or kind of human changes, whereby someone may be taking data off this sheet, adding it to data on that sheet, that should now all be automated. And this is the part that HMRC gave the soft landing period for, where they brought in MTD a couple of years ago for the first elements, but they did give businesses time to bed in. Now, for anyone who's voluntary VAT registered, and MTD is going to kick in for them from April next year, we're still yet to hear anything about whether the whole regime will come in force in one go, or whether there will be a similar soft landing period. I think for prudence, you need to assume that there won't be. So if you've not already started giving any thought to where you are on your Making Tax digital journey, it's time to start maybe giving some thought to that. Just a final note there, anyone who isn't VAT registered at all and only recovers VAT through the Form 126 regime might seem an obvious point, but just to let you know that MTD isn't relevant for the way in which those claims are submitted. Quick update here on something that HMRC announced in the last 6 months or so. They've announced a new and accelerated process for partially exempt businesses who've been affected by COVID. And effectively, they've said that if your taxable activities have been disproportionately reduced as compared to your exempt activities, you're able to have an accelerated process to apply for a change to your partial exemption method if you feel that it's no longer fair or reasonable in the current climate. So an example as to how that may be relevant is, for example, a charity who's had to close its shop or cafe, or specifically for you guys, an academy school who's not been able to make taxable lettings to third parties, so your taxable income dropped, but your exempt activities or non-business have still continued. Any new methods that are approved under this process will automatically remain in place for 1 year, but after that stage they will revert to the original method. Now, it may be the case that we see an extension to this accelerated process, so you could possibly reapply under that. Alternatively, there is always the usual method for applying for a new or revised partial exemption method. The only other thing to note is that under this new regime, HMRC have said that partial exemption methods can be applied retrospectively. This is different from the normal process, where any of you who've gone through this will know that you can usually only backdate it to the start of your VAT year that you were in. So again, a slightly generous allowance there from the revenue just to deal with the current situation. I'm just going to run through a case from the last sort of 18 months to 2 years, which affects the academy sector. So the case of SICAS was a supplier of temporary buildings, and they were supplying a very large prefabricated temporary classroom block to a school. And it was 2 floors high and had 19 classrooms, so quite a significant temporary area. It was originally hired for 24 months, but it was actually extended up to 32 months. And initially, the supplier of that block had treated it as subject to VAT on the rent, on the basis they said, well, this is a supply of facilities, not a supply of immovable property, which effectively is a term for land used within the EU VAT law. HMRC disagreed, and they said, no, this supply should have been exempt from VAT because it was actually land. The case proceeded up through the courts and ultimately ended up getting to the Court of Session, which is the Scottish appeal courts. The earlier cases had focused on the characteristics of the building itself and had said that it's not immovable because of the sheer size of it. But the Court of Session said that actually we should be focusing much more on the contract. And they pointed to factors such as the supply was always time limited, it was always meant to be temporary. The supplier clearly was a specialist in temporary accommodation. And the service contract made it clear that the supplier would both install and dismantle the block. And again, the judge also pointed to the fact that SICAS as the supplier had no interest in the land. So the final conclusion of the case was that VAT was correctly charged on the supply of these temporary classrooms. So it was taking the case as a clear indication that similar circumstances will likely result in VAT being due on temporary classrooms. Now, unfortunately, this isn't necessarily a great result for academy schools. Firstly, there's the obvious cash flow implication of that you need to pay the VAT to the supplier before being able to potentially recover it either through your VAT return or through a Form 126. But more importantly, you've got the potential VAT recovery issues to bear in mind if the buildings are being used for at least some exempt business activity. Clearly, it's better to not have the VAT there in the first place than to have that charged and then need to worry about whether you can recover it or not. Okay, so now a few slides just on the importance of for academies in fully understanding the difference between their business and their non-business activities. Now, hopefully no surprises to anybody that your education activities undertaken by an academy are non-business. All of your grant income or similar funding provided from central funds will be outside the scope of VAT, and no need to worry about accounting on that. But there are also other things and other income that academies can make that can also be outside the scope of VAT because they are activities closely related to education. There are three key conditions which must all be met, however, in order for this outside the scope treatment to apply. Firstly, the activity must be undertaken at or below cost level, so no intentional provision of profit being generated. The activity must be provided direct to the pupil, and then the key one, in my opinion, is that it must be necessary for the delivery of the education. Now, only this week I've been asked a question by a client around whether ticket sales for an end-of-year prom falls within this requirement or not. It is a grey area, but personally, I think that you are on quite difficult ground in arguing that a prom, which is effectively a party, is necessary for the delivery of education. One of those where, you know, it may be a relatively low level of income, but I wouldn't be surprised to see that HMRC, were they ever coming in and doing a review, may have some qualms around allowing that to be outside the scope. So examples of things that are ordinarily seen as okay under this bracket is catering and boarding, where children may stay overnight, breakfast clubs or after school clubs, educational trips or field trips, and then sales of things like stationery, calculators, musical instruments. As long as those three requirements above are ticked off, generally they're all outside the scope. Now, other activities undertaken by academy schools, if you can't get yourself home under the conditions on the previous slide, you are looking at needing to treat these as business. So a very common example for academies would be third-party lettings of space, areas within the building or sporting facilities, sales of any goods or services that were listed on the previous slide, but where these are done with a profit-making intention, and then very key one, very common, catering provided to staff or visitors. We'd always expect to see that academies are running some form of system to make sure they're only not charging VAT on pupil meals. Once you've then determined whether something is a business activity, obviously the next question that then comes is, well, is this business activity taxable or exempt, depending on exactly what it is? And why is this so crucial to understand the difference between the two? Well, it all comes down to effectively your mandatory VAT registration and understanding whether you do or don't need to be registered. The current threshold for anyone making taxable supplies over 85k, that threshold's been in place for quite a while now. I don't really see any suggestion that it's likely to move in the next financial year. If you are over that threshold, you must be registered, but equally you can be voluntarily registered. Now, just picking up on something Andy mentioned in the previous slide, we are seeing more and more moves towards the multi-trust model, expansions and amalgamations. I think the likelihood is that the more of this we see, the more likely it is that academies are going to be exceeding that threshold. And so keeping a close eye, you know, if you're putting near to that, making sure that you're keeping a very close watch on this and then registering when necessary. Once you are VAT registered, you then need to be completely clear on what is taxable business activity versus exempt, because obviously you do need to be charging VAT wherever necessary. And from the point of view of your input tax recovery, if you are making some exempt business supplies, it's crucial to have a formal business or non-business apportionment method in place in order to work out how much VAT you can recover. Just a quick note there to say this is different from how VAT recovery works if you are non-VAT registered and just using the Form 126 regime. In those circumstances, that's only recoverable on expenditure that's wholly attributable to non-business activities. Whereas if you are registered, you can recover a proportion of your VAT if it also is on taxable business activities as well. And then just a final note that the case law around the meaning of business is highly complex. It's not just the academy sector. Many cases in the VAT world have focused in on business versus non-business, which is still relevant to you. And not all of these cases are consistent with each other. So it's one of those where if you do think you've got a question mark over this, just reach out. Quick last slide on the importance of capital projects for academy schools. I'm talking here about large expenditure, so new builds, sports, facilities, theatres, classrooms, etc. Now, hopefully some of you are aware that there are various VAT reliefs that can be available, allowing you to buy in construction services at the VAT zero rate. However, the key requirement here for that to be allowed is that you must be using the new building for more than 95% of the time for non-business purposes, so teaching and education. Clearly, the benefit of the zero rating is, again, it aids your cash flow and it minimises any risk of there being irrecoverable VAT. If the zero rating isn't allowable, VAT recovery can still be achieved where the expenditure is attributed only to non-business or taxable supplies, or there can be an apportionment needed if there is an element of exempt activity being undertaken. Again, this is a complex area, but a very important one, sheerly because of the size of the numbers involved. And we do find that the earlier academies engage with this subject at the project planning stage, often the better it is that they're able to maximise their entitlement, getting various people involved in helping to increase their chances of a good VAT result. So I'm going to skip that last little bit there. And then just to make sure I'm staying on time, a couple of slides on an example case study for a example client that we've worked for recently. You may guess there that the ABC Academy Trust is not their real name. Mm-hmm. So the client asked us to run a basic VAT health check for them. They said that they felt like they were in quite a good position on that and they didn't think they'd got any significant risks, but they just wanted the benefit of someone external coming in and reviewing that. Ultimately, we didn't quite manage to agree with them on all squares around that because of quite a few things that we did identify that needed to be worked through. So the first thing they were doing was that they'd got a subsidiary trading company within their model, and the catering was being operated by the subsidiary. The problem we found was that they believed that they'd got an agency relationship set up, whereby the trading company was only selling meals on behalf of the school. The difficulty we found was that the contracts underpinning this weren't consistent with the intention. So there was a risk, therefore, that VAT relief on the sale of the student meals wasn't actually available because the trading company itself was not an eligible body. They were also planning on constructing a new drama theatre where they assumed that they would be able to get the zero rate on the construction. But there was an element of intended community business use. So there was a risk that that 95% test was going to be exceeded. They were also planning on selling some land in order to fund the build and had expected there to be a VAT hit on the associated costs of selling that land because they were going to do so as an exempt sale. And then they'd also got some sponsorship income coming in where they weren't sure whether it was a donation or a taxable provision of service. And similar to the catering, they were running swimming lessons and pool hire through the subsidiary. So having identified all of these areas, we were then able to work with the Academy in order to provide some solutions, either to optimise their VAT recovery and VAT relief opportunities, and to also minimise their risks of HMRC coming in and potentially assessing them for inaccuracies and errors. So the first thing we were able to do was to create a VAT special recovery method for the theatre and advise them to opt to tax the building. This then ensured that the only thing that the building was being used for was either non-business teaching or taxable hire of space to drama clubs and similar. This meant that they were able to recover the VAT in full. They still couldn't get the zero rating relief. There wasn't anything we could do on that score, but we were able to give them comfort that they could recover all of the VAT. On the catering, we were able to get comfortable that although the contracts did not reflect the substance and the reality, the way that the things had unwound on the ground and the substance of the relationship was still there. So we were able to retrospectively alter the contracts so as to match the intention of what everyone actually was planning on doing. So the subsidiary there was only acting as pure agent of the academy and not a principal supplier in its own right. We reworked their partial exemption so that they could recover costs on the professional fees for the selling of the land. And then the final point is that we gave them some guidance and assistance around how to identify the difference between a pure donation that's outside the scope of VAT. This is where the payer has no expectation of receiving anything in return for that money. And the difference with something that is more taxable sponsorship, which is where someone expects, well, I'll give you this, but I want X back in return. So that could be free access to renting rooms or similar. By then providing this guidance, we were able to convert what was at risk of looking like taxable sponsorship into a pure donation falling outside the scope of VAT, and it allowed the school to retain the full benefit of the entire payment, again maximising the benefit there for the school. Okay, so whistle stop tour there through VAT updates for you, but if we've got any questions in the room or any online, Steve? Around the nature of what is it that they're getting? Is it land or is it just a facility?
Okay, no worries. And I'm really sorry, everybody who was online there for a second. I managed to make it so they couldn't hear you. So that was my bad. But the question was again about container units for storage. So I don't mind. Could you just tell them again?
Yeah. So I think the likelihood would be that the same principles would apply for storage unit. The important factor isn't what's happening within the unit, whether it's teaching or whether it's storage. It's the fact that you need to look at what the supplier is providing, and are they providing a supply of land, which would be exempt, or are they just providing facilities? And I think a storage unit would just be equivalent to, say, desks or other capital expenditure. So I think it was likely that would be VATable.
Okay, excellent. Thank you. So that was my fault, everybody who could hear that. We're a non-business VAT and claim via 126. Can I claim back VAT on our before and after school club?
So as long as you're ticking off the conditions that I went through for that being closely related to education, then yes, that can be still recovered because that is non-business income itself. Awesome.
And a student wants to sell their paintings to staff and community through our website. Is this a VAT-able activity?
It would come down to the detail as to how you put that in place. So whether it was the student making the supply, but they're just effectively advertising it on your website, or whether the pupil makes the painting available to the school to allow the school to then make the supply. I think in either case, if it was the school selling, it'd be difficult again to see how you could get that as a non-business. I think that would be taxable. If it was the pupil selling, then I don't think the pupil's going to be VAT registered, so that would be outside the scope, but you would need to be clear on exactly what the setup was for that arrangement.
Okay, so do we have time for another one?
Glen?
Yeah, one more.
Okay, one more.
Okay, so this is from Caroline. We are a voluntary VAT registered. We have increased instances of tax charged by non-UK companies. Language a barrier to direct communication. How do I know if it's VATable?
Possibly a difficult one to answer in isolation. If you're buying in services from overseas, the general rule is that you should be applying the reverse charge on those and self-accounting for the VAT. So I think the fact that you're voluntary VAT registered isn't going to be a driver there. It's understanding the nature of what is it that you're buying in. If it's language assistance, probably a taxable activity. If it's education by its own nature, that might be exempt, but probably one that would need looking at a little bit more detail just to understand exactly what's going on.
Okay, cool. And Caroline and everybody else who is listening, if you have personal cases that you want to discuss, and same for us who are here, during the comfort breaks and during the networking at the end, you'll be able to speak to members of our team and ask those questions particularly.
Great. Okay, well, thank you very much. I'm going to hand over now to Glen, who is a director in the Academy's audit team.
Thank you, Helen. Good morning, everybody, those in the room and those online. For those who don't know me, I'm Glen Bott. I'm a director here in the not-for-profit team at Cooper Parry. I've been working with academies for over 10 years, so very experienced, particularly in the year-end, the audit considerations from an external audit point of view. You'll be pleased to know as well, I'm the only thing standing between you and a coffee break, so I'll try and rattle through as quick as we can so we're not too far behind schedule. There's three things I want to talk about in this session. So one, I'm going to pick up on the Academy accounts direction for this year. So the accounts direction will be following for this set of financial statements and the audit. Then we go through some things that you should be thinking about in the process. I'm hoping some things in there you'll all be doing, you'll be familiar with anyway. But I think it's always useful to have a bit of a refresher and to go through to make sure that you are doing these things I'll talk through, because it will make that whole audit process just a lot smoother. And then finally, what you can expect from us. So what communications, what documents you're going to be getting from us between now and that audit starting, to make sure that you are ready for that audit to begin. So in terms of the Academy accounts direction, there's been some changes in format for that this year. Last year there was just the one document, the AAD, but quite a big document, quite a beast. The core AAD part was split into 7 different parts. There were 4 annexes. Total document was 170 pages, so it was a big thing to work through. So this year they've split it into 3. You've still got the core Academy's accounts direction, very succinctly named. You've then got Academy's model accounts, again very succinctly named. And then potentially less succinctly named, the framework and guide for external auditors and reporting accountants of Academy trusts. Quite a mouthful. So the new AAD, they've simplified the content as well. It's now split into just the 3 parts rather than 7. So a bit about the financial reporting background, the regulations you have to follow, filing deadlines, those sort of things. The core section is around guidance around those financial statements and what goes in each area. And then part 3 is around specific guidance, so where you've got specific things within it, you converting academies or transfers in and out, or land and buildings, more complex areas is included in that specific sector. Just the 2 annexes, the quite small annexes, but 2 of the annexes from last year have been split out. So the Academy's model accounts, this is the old Coketown accounts that we used to see as an annex before, but now they're split out, so it's quite its own document. And then the framework and guide, I'm not going to say the whole name, this is primarily addressed to us as external auditors and reporting accountants, but they do recommend that trustees or accounting officers or chief financial officers do read this as well, so they know the sort of things that us as external auditors will be looking at as part of our audit work. Combined total of all 3 documents has gone up. It's 193 pages, so an extra 23 pages, but the extra front covers, contents pages, disclaimers that go in every document, in terms of content, it's probably about the same. So in terms of what's actually changed this year from an accounts point of view, there's a few things within the trustees report, but thankfully not too many. Something they have increased their commentary on, their guidance on, is around the financial review within that trustees report. So they've got some musts now, things that have to be included within that financial review, and then some shoulds. So within the musts, things like any significant events during the year, principal risks and uncertainties and key factors, but primarily looking at the financial impact of those and saying what impact that's had on the financial performance or the financial position of the trust. Something that I think is quite interesting between the must and the should is that you must talk about the financial position of the trust, but talk about the financial performance is only a should. And historically, what we've seen in a lot of financial reviews is the focus has almost been on that statement of financial activities. So looking at the SOFA, what's happened during the year, what income we've had, what we've spent on, what the outturn is. But the ESFA is suggesting, well, yeah, you should be talking about that. But the most important thing is almost that balance sheet focus and looking at that financial position and talking about any significant balances or material balances and what impacts that has and where the trust is looking forward as well. Any funds that are in deficit, these must be discussed in that financial review. The obvious one that all trusts will have is the local government pension scheme deficit. You will have a restricted deficit fund there. So talking about that fund acknowledging that it's there, how it's arisen. But then if you've got other funds as well that are in a deficit position, talking about what are you doing to get out of that deficit position and to improve that position of the trust. Put about the financial notice to improve there. There's a must that if you have a financial notice to improve or you've had one at any point during the year, you have to discuss it within your trustees report. So that's discussing the period it was in place for. You have to put a link in to the notice on the ESFA's website, what you've done to improve the position to get out of that notice. And if it's still in place at the date of signing off the accounts, you need to put an expected date of when the trust will be coming out of that notice. Supplementary bulleting. So you may remember last year there was an additional document that came out, particularly around the COVID pandemic and some of the disclosures you should have within those financial statements. There will be another one this year. It's not out yet, but we expect it to come out next week. And the content of that and the themes are going to be very similar to last year. Saying now what you need to say in your trustees report about COVID, if you've had any additional funding during the year, how you need to disclose that in the accounts. So keep an eye out for that. Something that's new in the AAD this year is around ESFA feedback to the sector. So they've reviewed accounts that they've had submitted in the past and given some feedback in here about the things that they see have been included or haven't been included. And they're really focusing on those Coketown accounts and particularly the model wording. They're saying they've got a lot of examples where model wording has just been taken from Coketown and put in your own trust accounts. And if it's not relevant, it doesn't need to be there. Take it out. Similarly, if you've got wording in the Coketown accounts that is relevant to your trust or sections that should be included, make sure you are including them because often they're not included. And they've got some common examples there, particularly in the governance statements of things that you should be including within that trust and they say has been missing in the past. In terms of some of the other changes within the accounts, as Andy mentioned earlier about the off-payroll arrangements, just making sure that is now disclosed. So if you've got any contracted chief executives or anything who aren't on the payroll, as well as getting that ESFA approval before you've done it, you then need to include them within all your staff cost disclosures. So if they're over 60k, they need to be within that table, etc. Something else they've slightly changed this year is around the funding classification. So they've said that where you've got BFE, ESFA grants, if you've got a material grant from a particular stream, it should be itemised out separately within that fund note. Whereas in the past, you potentially have the general annual grants and then other DFE, ESFA grants to say, now where you've got those material lines, make sure you do split them out. And you can see the little appendix, the little asterisk rather, on the comparatives. So if you are splitting them out in this year, make sure you do split them out in that comparative as well, so you've got that year-on-year comparison. And there's a point in there about leases, but again, Andy mentioned it on his slides earlier. So just making sure that you're classifying them correctly, and just to be aware where you've got contracts that may have an embedded lease. So if you've got a catering contract or an IT contract, and within that there is an element of finance lease, making sure that you are accounting for that accordingly. And there's an update on PFI as well, and some more guidance within there about whether the PFI should be on or off the balance sheet. And encouraging trusts to talk to their local authority, because they're often the actual party to that PFI contract, and asking them how they account for it. So if it sits on the local authority's balance sheet as an asset of the corresponding liability, and questionable whether it should be also sat on the trust's balance sheet. And where it's not on your balance sheet, but you are committed to paying funds towards that PFI contract, then making sure that's shown as a long-term commitment in your operating lease note, just so you are fully disclosing the commitments that the trust has. They've also rather helpfully this year put in a section explaining about the auditor opinion and about the different opinions that we will give on our true and fair audit opinion. So there's 4 different opinions we can give. Unqualified, which means everything's good, which is by far the majority opinion that's given. The ESFA released a stat for the 31st of August 2019 accounts, and of all of the audit reports that went in, 99.3% were unqualified. So that shows that's the vast majority of them. Qualified tends to be if there's a material error somewhere in the accounts, and we can identify it only affects one part of the accounts. In the audit report, we qualified for that reason, but in every other respect, the opinion is unqualified. Adverse tends to be where you've got a material error that affects one part or multiple parts, but it impacts the whole view of the accounts. So you have to give quite a negative opinion on that. And then disclaimer of opinion is the worst of all that. That's where we just haven't got enough information to give an opinion. We can't say whether or not it shows a true and fair view or not. So actually not too many changes for this particular year end from the accounts direction. I want to go through some of the things that you should be thinking about for year end. As I said earlier, hopefully all of this is teaching you to suck eggs, but always useful to have a review, because if you're doing all these things, then the audit process itself should be a lot smoother. Start now if you haven't already. We're not at the 31st of August yet, but there are a lot of things that you can be doing to be ready for that position. And we say almost do a pre-audit, particularly of your trial balance, because that's got all the information in that's coming to us. Check your opening balances. So one of the first things we do when we get a trial balance is just to look at those opening reserves, make sure they agree back to the statutory accounts that were audited last year. If they do agree, brilliant. If they don't agree, let's understand why. Potentially some audit adjustments from last year that need posting, or potentially you've posted some things direct to that reserves balance. So they may need taken out and posting elsewhere. Running through your control accounts that you've got, so bank reconciliations, hopefully you're all red hot on those, but not just making sure that you've got a reconciled balance that agrees to your trial balance, but having a look at what those reconciling items are. If there's some that are historically old, sort of 3 months, 6 months plus, then understanding what they are and tidying them up. Perhaps they need writing off if they're not genuine reconciling items within the bank. Fixed asset register, make sure that agrees to your trial balance in terms of both a cost view and a depreciation view. Looking at your sort of payroll balances, HMRC, VAT, you'd expect them to sort of go down to nil when you're making your payments each month. So make sure that whatever you've got at that end of year does relate to that final payroll run or that final VAT return that's being done. And then prepayments and accruals, just making sure you've got a schedule, you've got a breakdown of those items that agrees back to that balance that's sat within your trial balance. Also useful to do a sort of a sense check almost on your funding for the year. You can have a look at what you're shown as your GAG during the year and agree it back to your original GAG funding statement. Any other grants as well, just looking at them and do they look right? Are they consistent with what we're expecting to recognise as revenue for each of those during the year? Any LA funding that you've had come in. And then capital funding as well, whether that's DCF funding or SCA, or if you've got any SIF bids as well that you've been successful with, making sure that the income that you're recognising is consistent with what you're expecting to see. From a logistics point of view, just making sure that you've got the key dates in your diaries, making sure you know when those audit committee meetings, finance committee meetings are later in the year, when the accounts are going to be tabled, the audit findings are going to be discussed. And then when that board meeting, that full board meeting, is where the accounts are actually going to be signed off and approved, make sure they're booked in. If you may have already spoke to some of us here about booking in those audit planning meetings and completion meetings, and if not, you will be very soon. So make sure that they're in the diary, and then note when the actual audit fieldwork is taking place, so the right people from your trust are available during those dates to ask any queries that we've got. If you produce your own statutory accounts, then now's a great time to start rolling those forward, updating the template where there are any code town changes. There's not many, as I went through earlier. And then the trustees report as well, something that's quite often left as a final item, one of the later things for the audit. But you can start it now, and big chunks of it can be written and prepared now, as well as adding in the new items that have come in this year around that financial review. And then the governance information as well. So get in touch with the clerk at the trust. If there's been changes in members, governors during the year, appointment resignation dates, those sort of things, any changes in professional advisors, and then the on-meeting attendance, start adding them up and making sure you know who's been attending and how many meetings they've been at. Audit deliverables, something that you'll be receiving very shortly from us as well if we're your external auditors. So have a run through of that list, make sure you're familiar with what it is we're requesting. If you're not sure what it is that we're asking for, then please do get in touch and we can help you with that. And also think about, are these things available electronically? If you have still got lots of paper records and we need copies of those, then perhaps make a start on some of the scanning early, or think how they can be available electronically. Some things can be uploaded now. We've got a system called Inflo we're going to be using this year, which Bott's going to be talking about for us a bit later on and give you a demo. So when that goes live, you can start uploading things straight away. So you've got board minutes during the year, internal audit reports, anything that's available now, start getting it on there, because there'll be less for you to do when you come back in September, when I'm sure you're all busy with the new school year anyway. There's always going to be items as well that sort of out of your immediate control in your role. So who do you need to chase up for some of this information? Declarations of interest. There's normally a handful of those that haven't been done for the year. So get onto them now and ask them to complete them and send them in. Local government pension valuations. Hopefully your actuaries or your schemes have been in touch asking you if you want them, when you need them. So make sure that they're going to be delivered. And then if you've got any sort of new converters or schools joining and you need land and building valuations, make sure they're in place as well. As Andy mentioned in his talk earlier, ongoing concern, that is a big focus for us this year. And also looking at how the trustees have concluded ongoing concern, because we're going to be looking at that and challenging that to come to our own conclusions about whether or not we agree with you. So they're the things that we'll need from that. Your budget forecast return, hopefully you're all preparing that for the deadline at the end of this month. But we'll be asking a lot of questions about going concern this year. So what can you expect from us? Normally I have a picture up here of shaking hands and say, well, we're your partner, we've got our arm around your shoulder, we're going to help you through the audit, but we'll be touching your elbows this year with the current climate. But in terms of what you're going to get from us shortly, audit planning meetings will be booked in if they're not already there. As I say, they will be shortly. We can hear from you about what's been happening at your trust during the year and how you've been operating. We can discuss those sort of audit logistics and get everything booked in. We'll then produce a formal audit plan, which is a document which sets out the key audit risks, what we're going to do to address those risks as part of the audit, agree the timetable, who your audit team is, and a bit more about our audit approach. And that's a formal document that will go to the audit committee or finance committee at your trust. The audit deliverables, as I say, they're almost ready. They're primed to be released on you all. So once you've seen Inflo, you'll start to receive that and you'll be able to go through those deliverables. And then trustees report guidance. So those who have had us as your external auditors previously, we release guidance around that goes above and beyond Code Town and gives you a bit more examples and areas where you can include and what you need to include within that report. If you've got any questions about the year-end process or the audit or accounting treatment or anything, get in touch with us. So there's no such thing as a silly question. We want to hear from you. I always think it's better to hear from you early so we can have those conversations, put things right before the audit team arrive, and then have to try and sort of unpick something that you may have done earlier in the year. Let's have that conversation as soon as there is something to have a conversation about.
Welcome back, everyone, into the room and into our virtual room as well. I hope you had a good chance to take a little break, stretch the legs, grab yourself a hot drink. For those of you who don't know me, my name is Bhavesh Patel. I'm a manager here at Cooper Parry, and I'll hopefully be working with some of you going forward as well for this year. I have the pleasure to show you sort of our new sort of exciting system that we'll be using for our audit process this year. So last year we used teams with various different degrees of success. Some schools were able to use it quite well. Some schools had trouble accessing it because of IT issues. So here at Cooper Parry, we decided to switch up and invest into a new system called Inflo. So rather than just show you some static slides, I thought it'd be best to sort of show you a live presentation on our demo site, which we've got set up. So I'll just switch across the screen so we'll be able to see it all together. Now, for those of you at home, if you want to get sort of the best experience, it'd be worth clicking this expansion button up here on the video so you can see the full site along with all the various different options on screen. So Inflo, as I said, it's an online-based system. So hopefully you can all see it at home. It's online, so there's no need to install any software. We can have all the users set up. So just as long as you have access to a browser, you'll be able to access Inflo. We recommend Google Chrome. You can use any browser, but we found that the performance through Google Chrome is a little bit better for the majority of users. So when you get on, this is just obviously our demo site, which we've got set up. This is the dashboard which you see. So again, nice big bold colors, just like we like here at Cooper Parry. So what you're seeing here is the dashboard for this particular demo engagement. Now this is all driven by the Collaborate module. So Collaborate module is where we essentially have our request list or audit information request list. So if you click into that, you'll be able to see sort of the information driving it. Within the website, there's a number of videos embedded when you click into the different modules. They're only about 2 or 3 minutes. I'll recommend watching them. They give you a bit more background and insight into the module that you're actually in. But once you're happy with them, you can actually click so the pop-up doesn't sort of keep popping up and annoying you. But again, I do recommend giving it a watch. So this is our request list here, along here on the left-hand side as you scroll through. This is a demo engagement for how we'd have it set up for our Academy clients. So each different section has its own request lists and its own request items. So if we have a look into them, for example, if I click onto the regulatory questionnaire, you'll then be able to see the detail of the request list. There'll be some comments as well. So if you've given us a very useful schedule in the previous year, we might actually upload a copy of it. So to sort of jog your memory to see if you've got a similar schedule or an updated schedule for the actual request for this year. If I go into sort of a standard request, I'll show you sort of how to interact with them. So again, you see the name of the request, details behind it, and then you've got these different boxes here. So comments are very useful. The power of Inflo compared to how we were doing it on Teams is it takes the conversation out of Teams and it takes the conversation out of Outlook. So you're not having to trawl through lots of old emails to find out, well, what audit queries are outstanding, what questions are they asking, who has it come from, and who do I need to get back to. All comments that are included here are just added against the actual audit request to which they relate. So on here, you can say, for example, see attached. And then you can submit that across to us. You can also notify us via email as well. So if, say, for example, we haven't started the audit, or if it's slightly after the audit field work and you just want to give us a little ping to say that you've got a new comment added, you can actually select the member of the team you want it to go to and then hit submit. The next section along is the files. So this is, again, a vast improvement on Teams in the sense that in the previous year, if the file that you uploaded didn't match initially the title of the request, there was often a bit of a disconnect between us thinking we've not received the information and yourself having uploaded it. So this minimizes the need for repeat requests. So with the files, there's no restrictions. So it can have a single Excel file, it can be a CSV file. There's no restriction in the file type, so it could even be a backup file, PDF, or even a zip folder, and you can either select one item or you can select multiple items and then click open. And that will then upload the items here within the file section. Now, say, for example, you've uploaded it and you realize you've uploaded the wrong item, not a problem. You can simply click on the menu option and actually delete out the file before it sort of comes across to us. So again, you add a comment, you upload your files, and then once it's done, you hit submit to the engagement team. Again, you can notify us via email, and then you can send a message. So, see attached, and then submit. And that will then change the status from what was received to, submitted down here. So the different statuses are across here. So when you first receive your access to the site, a lot of the requests will come up within this receive status. If you've clicked into it, it will show as in progress to us on the audit side as well. So that just means simply you've clicked on it, you've opened it, you've acknowledged what needs to go in there, but you might not have necessarily provided any information to it. Once you have provided information and submitted it to the engagement team, it comes across as submitted. So that button there, submit to the engagement team, is very important because you can provide comment, you can provide uploads, but if you don't submit it across to us, it will still show as in progress. So make sure you hit submit to the engagement team. And then in order to get things to complete, that's just done by our audit team on our side. So if we open up the files, look at the comments, if that answers our audit queries, then we'll complete that and that'll move it to the completed stage. If, say, for example, we've got a few more follow-on questions, we'll actually resubmit that to you on the same request. So again, the power of it is rather than having a list which just keeps growing, we'll be working on the same request until that item's done, and then again, moving on to a new item. So again, it keeps all the conversations out of Teams, out of Outlook, and against the request to which it relates. So the aim of the game really for the audit is to get everything from the received red bar all the way up to the green complete bar. Once items are submitted to us, there are different ways that you can actually still engage with the information. So one powerful element of Inflo is the fact that items can be delegated to members of the team as well. So there has to be a member of our audit team associated with each request and a member of your finance team associated to it. Now, if you want to, you can click on your initials and actually reallocate the items. So again, if the request items come through to you and you think, actually, there's another member of the team that could actually pick this up for me, if they're added into the system, you can select them from the drop-down list and hit confirm. And what that does, it takes it off your list, it adds it onto theirs. And again, the power of the Inflo is that a lot of these visualizations on the side are fully interactable. So you can actually click on My Team and find out how people are getting on with their individual requests. So again, if you're part of a larger team and you only want to see requests that relate to what you're after, just click onto your name and that will take out all the noise on the left-hand side, leaving you only with the items which are against your name that you need to kind of deal with. If you're happy with that, you can also sort of clear off filters. Again, if you're doing a higher level sort of management and you want to see how far we're getting on, where are the delays in getting some of the information, you can actually click on the various different statuses and that will then, again, filter through so you can see all the stuff that's either in progress or a little bit delayed. And again, picking up any delays in the system, ensuring that we have a nice efficient audit as we get through. Another item which you can do is you can actually recall some items. So say for this one, we've submitted the accounts. If say, for example, you've got an updated schedule or you need to have another version put in, you simply hit the cog icon at the top and you can actually recall the request and that'll take it back and put it back into your area. So again, you can actually add new comments, add an additional file, and then once that's done, you can submit that across to the engagement team. Another function of the system, again, which is worth highlighting, is the fact that we can actually set up some restrictions on some of these items as well. So if there's any sensitive requests, so this is mainly around things like payroll, potentially board minutes, anything to do with key management personnel, let your audit team know in advance if there's any restrictions that need to be put on, and we can make sure that only the people who need to see it can actually see it, along with the information that's uploaded to it. So again, let us know early, speak to your audit teams during the planning meeting, and let them know of any particular items that they need to then sort out for you there. You're also the ability to actually create your own requests. So say, for example, you get the list and there's something that you want to provide to us, there isn't a little space for it. If you hit the plus icon anywhere on the lists, you can actually create your own item. And then once that's all done, you put in the details of what it is and hit create. That will then open up a new request. You can upload the folder and then send it across. If you have trouble doing that, just speak to a member of your audit team and they can create it for you as well. But if you need to create it for yourself, you can do that on the fly. Now, the functionality of Inflo means that it's very flexible in the way it's set up. So if you're a single academy, we can have a single list. If you're a multiple academy trust with a centralized audit function, again, we can have a single list. And then we can potentially have any satellite schools that might have small bits of information that are needed from them as their own individual category. So then we can have the people from those schools, the business managers or the finance managers in those areas who are responsible, and have them allocated to just that section only. So again, it's very flexible. So have a think about how you'd like it set up. It should kind of match the way that your finance team is set up across the schools, and then we can get that set up for you in advance to you actually receiving the list. So that's the collaborate module. So that's basically where we'll be sharing the information. So hopefully the dashboard now makes a little bit more sense. These are just, again, the little visualizations we had sort of in the middle, so you can see at a glance. So again, the power of Inflo is that it's live. You're not having to chase around the team, find out what bits are outstanding, or trawl through lots of information to find out where we're at. It's live, and it's a live picture that we both share, so we can see how the information is coming across. You can see how we're getting on with completing the audit. So if there's any issues, you can jump on a call, find out what's happening, and resolve any issues. So that's one of the good sides of Inflo. The other one I just want to quickly touch on is just ingest. So as well as sharing information, this is the system allows us to actually pull in some data from your finance system. So we can run basic data analytics, do things like journals testing, but the key power really for yourselves as clients is that it takes away the requirement for you having to run reports for us. So if we want to know what's sitting in, account 2000, we can actually run that ourselves once we've got the data in. It saves you and your team having to run a number of different reports for us. We can do that ourselves if we can get the data up in and early. Now, the systems it has, I can quickly sort of show you the list. It's a well-known product across the audit workspace. So there's a number of different systems it can go through. Some of the key ones for academies, we've got PS Iris, which was previously PS Financials. There's SIMS as well, and there's also Xero, which we know we're using across some of our clients. But it's a very big, vast system. So again, if it's not listed on there, have a chat with the audit team, and then we'll be able to set it up. It'll bring the information in via normally a desktop connector if it's listed there. So it will go in. It's a .exe file, so you might need a member of the IT team available in order to help you run that on your systems, depending on your firewall. But once that's done, it'll automatically go into your systems, retrieve the data we need for your general ledger, and I'll have all the items there. So yeah, have a chat with the audit teams at the planning, see how you like it all set up. But it's a very interactive system, very live, and it will allow us to sort of collaborate a lot easier and a bit smoother when it comes to the audit. So that was sort of my demo. Was there any questions or anything that came up?
Yeah, we've had one question from Jennifer. Can documents be edited once submitted on Inflo, or would it be necessary to delete the file and resubmit the updated file?
Well, that's a really good question. Thank you, Jennifer. So you've got various different options. So when an item's come through, so if you have a look at one that's submitted, so we've got one here, say for example, which is completed. What you can do, if you actually hit the cog icon and click recall request. Oh, can't do it on that one, sorry. I'll just get one into the right stage. So say for example, this is your first attempt, the item's gone in, it's loaded, submit that to the engagement team. So there's there submit. So that, if you wanted to change that one, all you have to do is click the cog icon, hit recall request, hit confirm, and that'll take it back to an editable status. So again, if you wanted to, you could just upload another file, and if you wanted to delete the other one out, it's just a case of hitting that, and then you should be able just to remove out the item. I think it just needs to refresh, but yeah, you can delete the items out once they're in there. But just, you know, you can also speak with the audit team as well, and they can sort of remove any items. Or if you wanted to, you can add a comment and say, please see updated, do not use old file. So that way, when the audit team go in, they'll see the message as well as the different files, and they'll be able to know which one to use. So again, it puts the conversation against the actual request to which it relates. So it's very flexible in that way.
Okay, and we've got a question from Caroline. How do we set up access to our financial system? So how do we set up our connection?
Yeah, so on the ingest module, I'll quickly show you one here. The first few stages are set up by the audit team. So the audit team will hopefully know which system it is which we'll be using. So say, for example, on this one, we've put in PS Financials to select it. You click Next. It then asks us to upload some trial balances. So I've got a few dummy folders in there, but essentially what you do is you just bring in the closing TB for this year, the closing TB for the previous year, and then you hit process. It then takes us onto the bit in order to connect it to your system. So this is where it runs a .exe file, so an executable file. So this is where you'll need some support potentially from your IT team, because a lot of schools have firewalls. Once you run that, it'll ask you to log into Inflo. So you type in your Inflo login. It'll then ask you for a few details for your finance system. It's mainly server address for where the main database is sitting. And once that's done, like I said, it'll go into the system. It'll collect only the data it needs. So I think there's 10 key fields it looks for the year that we're looking for, nothing more than that. And it then pulls that in. If you do have any trouble with that, we do have the ability to actually use reports. So we can use a bit more of a manual process by getting reports out of your system and then into Inflo. So again, very flexible. We try to use the desktop connector where we can, because it takes a lot of ease out of it. But if there is access issues or any items like that, there is standard reports as a fallback.
Cool. Brilliant. There's any questions in the room, but we've got we have one more question. Is SIMS MFS on the list of financial systems?
Yes, it is. Yeah, I checked that this morning just to double check. But I think it's in here. It's listed as Capita. There we go. So it should be on there. So again, it should be listed. If it's not, there's various different generic options as well we can pick. Again, chances on those will be we'll be able to bring it in through reports as well. So again, it's very flexible. It works very well across a different range of systems, but that is on there as well.
Cool. And Peter'd like to know, thinking about cybercrime, how safe is Inflo so far as all unauthorized access is concerned? Can Inflo access sensitive info, say on safeguarding our files, in our files?
Okay, so the only information that is needed from the desktop connector is access to the numbers on your finance system. So it won't go into any personal information. It will literally just be the main items it takes is sort of the account number, the details, and then a net figure and any user information in terms of who's entered that journal or who's entered that transaction onto the finance system. So it's very tight in terms of what it's able to collect from the system. In terms of access, Inflo is ISO 27001 accredited for security, and we've also set up two-factor authentication as well. So each user that's added onto the system will have to set up a secondary device to allow them to use two-factor authentication for logging in. So again, so it's very secure, and we're also going to make sure that the restrictions are in place as well. So when it comes to things sort of your payroll and other items like that, the request should come to you password protected. And again, there's restrictions on the system in terms of who can see what. So we need to set that architecture up at the beginning. But a very good question.
Cool. I think we've got time for one more, but then any other questions, we've got time for Q&A at the end. And I know, Bav, you're making yourself available online, aren't you, to go into the networking space?
Yes.
For questions at the end. Yeah. But Peter wants to know what happens when you have a subsidiary company, so two separate ledgers.
Yeah, so that's fine. No, fantastic. So Inflo is also set up for group engagements as well. So a very good question, because a lot of trading subsidiaries out there will actually have a separate request list, because the request items we need from a trading subsidiary will be different for what we'll need from sort of an academy type client. So there will be a separate list which will be published, and it will have the name of the trading subsidiary against it as well. Fantastic. A great question, yeah, and as Steve says, we'll be online to answer any other queries. So thank you for your time, I really do appreciate that. So if I just switch back to the presentation. Bro, so I'd like to hand across to Phil Curtis from Ralph Sherwin as well. For these questions.
And nice to be here in person, getting out of the house. And nice to see you guys on screen where you can see me, I can't see you. Your journey has probably been easier than mine in terms of leaving the house. Normally when it's Zoom or Teams, you get out of your house, go to your office, whether it's at work or your kitchen table, and there you go. Yesterday I had the call from Andy to say, you do realise you're not in the Midlands office, but in Solihull. So that's an interesting one, because I could have been not here today. It's sat somewhere near East Midlands Airport, which I'm not, so thankfully I managed to get here. Just in terms of what I'm going to just run through very quickly really is what it's like to build a MAT with 25 schools in it. Some of the queries, I suppose, in terms of going concerns. So what our reserves position look like through the years that we've been operating now for 3. Some of the things we've done in terms of managing our reserves around integrated curriculum and financial planning and gag pooling as well. So a number of years ago, probably very early 2018, a colleague of mine said, Phil, I've got this great proposition for you. You know, you've always really wanted to grow in a MAT. I work for a smaller MAT. It's really difficult to get academies to join you sometimes. You know, you've got to go through that process of presenting to them, aligning your ideals, and then making that connection to get them to come on board. So how about, there's an exciting project in Derbyshire where the diocese itself has decided all of its schools are going to go into one of 4 multi-academy trusts. Don't have to worry about your growth strategy, it's already in place. Here you go, 25 schools. And I thought, well, you know, it sounds really good there. Looking at the picture, I think, yeah, okay, I can live with that. So what they, with the diocese, it was very directed. So the bishop said, all of your schools in the diocese are going to go into a 4 multi-academy trusts. And it's all going to happen on the 1st September 2018, and there you go. So for us, it's been great. When you start to look at it as a picture, so you might be able to see the map, you might not, but essentially we cover the whole of Derbyshire and a few on the borders as well. So we've got schools in terms of how this was built, and from 5 different multi-academy trusts. So we had St. Robert Lawrence with 4 academies. We had Holy Family with 2 academies. We then had St. John Fisher, a single academy trust with 1. St. Edward's with 1. Another with 1 as well, St. Philip Howard. That makes 9 academies already in the system already in terms of academy status. And then we had 16 converters from Derbyshire, Derby City, Stockport, and Staffordshire as well. So a lot to bring all together. and very exciting as it would sound. And I don't deny it's not been exciting as we've gone through. So it's building that brand new system of schools with the 25, bringing 8,000 pupils together under one organisation with 1,200 members of staff. So as I said before, it's 1st of September. We inherited 26 payroll systems by 5 payroll providers. So you can imagine what reconciling payroll was like at that time. We had a brand new finance system with brand new finance staff. We had a new HR system with HR staff. Brand new payroll system with a brand new payroll team, and a brand new budgeting system of which no one knew how to use. So someone was selling this to me a number of years ago. Phil, this sounds like a great project. And I went, yes, it is. I'll apply for that. And here I am. And I'm still smiling. So it is good from that point of view. Then you start to look at the finances. So this is what we expected to see on the 1st of September 2018. We expected 6 of those schools to come in with deficits amounting to £127,000. In reality, it was only 5 academies. There's the good news. But it was actually 1 million in terms of deficits. Equally, we expected 20 of our locations, including the central team, to bring in surpluses of 2.2 million. In reality, it was 21 with 3.4 million. Good news. The net effect of all of that was the same. So we're expecting about £2 million in terms of the net position. We ended up with 2 million. Sadly, it was all just in the wrong places. And that's nothing to do with how the due diligence went. It was more to do with how people account for certain transaction. So when is a loan counted as a future expenditure? So many of those deficits for the schools, they just said, well, we're just going to be paying that over the next few years. We'll just put it through our budgets as a revenue expenditure rather than put it onto the balance sheet. And then when do you defer income into future years? So where we've got surpluses greater than we were expecting, because they were saying, well, actually, we're going to spend it in future years, so we're not going to count it as income now. So again, it's just about how people account for things in different systems with 5 different local authorities. It was completely different from most of our schools. But really exciting times in terms of being an accountant, dealing with all of that and making sure it all worked and pulled together. But operationally, from those schools' point of view, managing budgets made no difference if it was a big surplus or a big deficit. They knew what was happening going forward. Just as centrally coming into the system, we weren't quite sure about the differences between what we expected and what we actually ended up with. And then going forward then, just thinking about what that looked like. And we talked about, many people today have talked about what the going concern situation is like. So we started off with 2.2 million back in September 2018. After year 1, we had just under 800,000. After year 2, it was down to £500,000. We're now in year 3. It's looking like it's going to be recovering. But in terms of that going concern picture, it was quite a challenge in terms of understanding that from our point of view, being new to post, new to the trust, but also having other people understand that as well. So the team involved in due diligence knew this was happening. When I was there looking at the budgets, I knew this was happening. Unfortunately, the SFA get a snapshot in time in terms of what's happening. So year-end accounts, they're audited, reliable source of information. After year 1, they said, well, you've told us you've burnt through 4.4 million. We went, yeah, we knew that. They went, well, we're not too happy about that. We went, okay, well, we expected it. So you've done your financial forecast for the next 3 years. It's not looking great. We went, yeah, I know that, but we kind of know what we're doing. We're moving forward. And we've got some ideas about how we're going to bring it all back in line. So from our point of view, we've done some of that, bring it back in line. We're expecting to end this year in terms of recovery, and next year moving into further recovery in terms of rebuilding reserves. And the SFA actually sent in an SRMA. Many of you have heard about those today. Extremely useful exercise from our point of view, validated some of that work we've been planning to do for the first 18 months of operation. They're now bearing fruit in terms of how we operate going forward as well. So one of those key tools then is this integrated curriculum and financial planning. Many schools do it quite naturally without documenting it. But I suppose for us, we needed to understand it for 25 schools, what that meant for the trust, And we all know that Department for Education, ESFA, have put a big onus on using these tools, and when the SRMAs come out, they want to see these as well. If you don't have them, they'll talk to you in form label. But what they say really, and it makes sense, is only by looking at all aspects of your provision can you ensure that the curriculum can be delivered with the finances available. And it's looking at things like number of form groups, if you're a secondary school, number of year groups and how you're mixing those if you're a primary school, what options you might give at key stages 4 and 5, and in turn that will give you an ideal number of teachers. So you kind of know what your teaching requirements are, you can budget for those and move forward with that. And then in terms of other areas of expenditure, it's business support functions, TAs, etc. It's about making sure we can operate the academy safely to be able to deliver that curriculum that everybody wants, but do it within the confines of the funding available. So that's what we did. This is one of our schools. This is this year's figures. It's a secondary school. So they've got around 1,300 students there or thereabouts. It fluctuates a little bit. So this is their plans for the coming September. So they're going to have 23 options in terms of subjects and options going forward around key stage 4 and 5. That's then distributed into nearly 3,000 teaching sessions in their teaching cycle. Might not mean a lot to you, but 50 sessions per week equates to around 78 teachers, strangely enough, and that's what they've planned to employ, 78 teachers. It's amazing to think how many schools do this quite naturally without thinking about it. Some schools don't, and they think they've got the right number, but they turn out they don't. So some of those things that the ESFA and the government send out to you in terms of benchmarking, they're really useful tools. If you're not already using them, please do so, because it will help you inform what you're looking at going forward and help control your schools in terms of expenditure. What we're saying there really is the benchmark for spending of your income is 53%. This school is 52.4%. So by doing that exercise, what we've done there is to rationalise the staffing structure to make sure that the staffing employed meets the needs of the curriculum. I don't do this in isolation. We have lots of school improvement partners. They know more about the curriculum than I do. So I make sure we involve those partners to make sure that I'm not cutting costs because I'm an accountant and I like to cut costs. I like to make sure that the provision is appropriate for the school context and the school improvement priorities as well. So I don't do it on my own, is what I'm saying there. Make sure you include the people that have influence over standards. And the other thing we've done as an academy, well, you saw the picture earlier on about what our reserves position was looking like, going from 2 million to 500,000. It wasn't a comfortable ride. And actually what we ended up doing after year 1 is to freeze all the reserves, so no school could spend any of those reserves that they brought forward. After year 2, instead of having 5 schools with a deficit, we ended up with 12 schools with a deficit. And we said, well, let's just think about this in a different way. We've got 8,000 pupils in year 1. We had 8,000 pupils in year 2. We're forecasting 8,000 pupils for the next few years. And our funding has remained relatively static. All right, we've benefited a little bit from the national funding formula. But what we do recognise, those schools that are losing pupil numbers have funding for students no longer there. So they can afford to do things that other schools might not be able to do. But other schools that were gaining significant numbers of pupils but didn't have the funding to deliver the curriculum that met the needs of those pupils. So we said, well, what if using integrated curriculum and financial planning, we don't worry about finances at that stage. We just say, what's your curriculum look like? How are you going to staff it? That's what we did at the first stage. Turns out, if we do it on that approach, quite naturally the finances fit. And schools using those techniques end up with a surplus where they're losing numbers. And those schools, and I know I'm telling you all the stuff you probably already know, but it's useful to do that. All those schools that go through growth end up in a deficit position within those years. So actually by distributing those funds fairly across all of our academies, using integrated curriculum and financial planning, we're able to staff schools appropriately for the number of students without having those schools worry about their finances. If they had teachers, It's been an incredible journey for them. A lot of them say, well, that's great, we don't have to worry about finance anymore. Some of them say, well, I really want more control over finance. We say, well, actually, what do you need from a curriculum point of view? And I think when you start thinking about what do you need from a curriculum point of view, and I know the benefit of being 25 schools instead of 4 or 5 is significantly different, but those conversations still remain the same. What do you need? How are we going to get there? So that's where we've got from how we've come about in terms of the first 3 years with St Ralph Sherwin. And I suppose what you're probably thinking is, what's all this got to do with audit? And I think I mentioned earlier on, it's about, for us anyway, and for many of you, it's about that going concern picture. So what are your strategic plans, particularly around school improvement priorities? What are your growth plans, and what's your due diligence around those? And what's your risk strategy, and how are you managing risk? Particularly for us, it was around managing those deficits and the available surpluses, particularly where schools wanted to spend money and we couldn't allow them to, which is an interesting conversation in itself if you're ever in that position. Key to all of this really for us, and we demonstrated this throughout, is accurate financial forecasting. And even where some of our auditors, not Cooper Parry, but some of our auditors didn't quite believe what we were telling them in terms of the future forecast, we were able to demonstrate that in great detail. And that really helped with our going concern picture as well. So even though you might be on a downward trajectory, if you know it and you know what you're going to do to get yourself out of that, really important to discuss that with your auditors as early as possible. So I mentioned going concern. ESFA interest. For us, we went below the 1% magic figure in terms of reserves compared to our income. ESFA, after year 1, said, would you like an SRM visit? I said, I'd rather not, thanks. So they went away for a year, came back, said, your reserves have gone down a bit more. We really think you need an SRMA visit. I said, well, okay then. But we'd already implemented a lot of those tools that we knew were going to make a significant difference. And for us, what that meant, the SRMA came in and said, well, Phil, you've done some great work in terms of what you're planning on doing, how you're managing your schools. What do you want me to look at? I said, well, actually, you can just validate all of that for us. So I think it's important to know for you guys that the SRMA visits are a valuable source of reassurance for yourselves if you're doing the right things. If you're struggling with some areas of those, actually having your SRMA come in will actually help with that vision, I suppose, in terms of how you manage your finances in schools in the short to medium term, and obviously thinking about longer term, making sure your financially stable. And of course, SRMA reviews come in, and going concern is a key one, but I suppose it's not just about the finances. As Andy has mentioned earlier on, it's about governance arrangements. Ultimately, some of these things can lead to financial motives to improve, and it's important then that you've got everything within your gift together to make sure you've got plans to get yourselves out of those difficult situations if you found yourself in those. And I'm not saying St Ralph Sherwin has been a difficult journey. It's been an interesting one, an enjoyable one. And going forward, we can manage those finances for the benefit of those 8,000 pupils that we've got, which is fantastic. And I think, there you go, that is me. Thank you.
Awesome. We have some questions. Are there any questions in the room before I go?
I've got a question.
Okay.
Yeah. So, and I know, with gag pooling, so I was talking to one of your trustees yesterday, and I think he's in the audience, virtual audience, and he's saying how that's been a real game changer for you. And I know with other trusts that we've talked to and worked with, that the biggest hurdle with gag pooling is getting everyone on board. All the schools, the heads on board. So was that a particular challenge, and how did you?
I can understand that being a challenge for many multi-academy trusts, particularly where you've got schools with surpluses. I think after our journey, where we had a significant number of academies entering into in-year deficits, carrying deficits, it was a relatively easy one for us in terms of, we're a Catholic organisation as well, so we all understand about giving and taking in terms of supporting each other. So that made it really easy, but key to all of this was stakeholder engagement, making sure everybody understood what was happening in terms of why we're doing this. And in particular, those schools that had large surpluses because they were planning on building a nursery, for example. So, well, actually, we're ring fencing those for you. So when we're in a position to start spending, and part of your plans is to have a nursery, we're in a position to allow that to happen.
That's great. And we have another question about GAG pooling on here. It said, which income streams did you ring fence?
So the only thing we've pulled is GAG. So everything else has been left to the schools in terms of management. So pupil premium, sports premium, universal free school meals, all those other income streams have been left with the schools to manage and manage those within their own improvement plans.
Excellent. And which finance system did you choose?
It's an interesting one, that. We are using PS Financials, and I say we are using PS Financials because I didn't get the choice on that one. So I joined the MAT when that was already a chosen provider for us, and it's one that's shared across the 3 multi-academy trusts. I'm pleased to say it's one of the better ones out there, and there are many great financial systems out there. I think the key to it really is not to concentrate on the software, but about how you interact with that software and the systems you put in place around personnel and managing information.
Cool. Okay, well, I got one more. If I was just looking around the room to see if anybody had any more, but I've got a couple more actually. Your ICFP gave PTR 16. SRMA typically wants 17-18 for secondary. Was this not challenged?
I might need a bit more. I think
I've just read the question. So that's from Chris. So I don't know if
Chris, send me an email later on. I think that might be. I need a bit more context in terms of what that actually means.
No problem at all. And of course, will be people, because you're online, Chris, as well. We'll have people online after this as well, so you can be able to give more context. Caroline said AFH 2020 and AH 2021. Should we be looking to adopt and tailor it to similar to the finance manual and maintain schools?
So that's the. Give me the abbreviations again.
The abbreviation was the AFH 2020 and the AH 2021. Handbooks. Yeah.
I'd say align to those as soon as you can. I'm not entirely sure what the context of the question is.
Okay. No problem at all. So maybe we get some more information from Caroline on those. No worries. Well, Claire did follow up with pupil teacher ratio, I think.
Yeah.
And sorry, the 2020 question was for Glen.
Oh.
So I reckon we should move on to that. No worries. Okay, I think that's what we should do. I think we should move on.
Well, thank you very much, everybody.
No worries. Thank you.
Okay, so over to anybody in the room. Any other questions that you want to ask?
Okay, well, we did have a question from Linda earlier for Andy, and it did say, is the suitability check applicable for chairs of audit committee also?
No, as I understand it, it's purely chairs of trustees. So no, but you can, because it's something that you submit to the ESFA, and the ESFA go through that check to look at, are they satisfied that person is suitable to be a chair. So it is very much about the chairs, the trustees, but you can perhaps use the questions to assess suitability of chairs of your audit committee.
Okay, no
and
problem.
also, I think, Adam, you had a question earlier just about the timing of that. It came out July last year, July 2020, so relatively new.
That's excellent. I think the question earlier was for Glen. Do you remember the question, the AFH 2020 question?
Yeah, I think the question was the changes that do they need to update their finance procedure manuals and documents to marry those changes that have come in. I don't think the big change, as Andy mentioned in his, about the new Academy Trust Handbook, the fact that it is still referring to itself as the Academy Finance Handbook as well. So saying that, they understand that everyone's policies at the moment will still be referring to the name of the old document, even though it's been updated. So yes, if you are reviewing your financial procedures manuals, reviewing your internal documents, update them for the name. I think over the next 1 year, 2 year, 3 years, make sure that it is all updated with the wording. But in terms of the actual content and everything, there's those key changes that we talked through, which you can update for. But in terms of the naming of the documents and things, I don't think there's a real urgency for that, but just as they naturally get updated as you update the documents anyway. Hopefully that answers the question.
Fantastic. Well, we are out of questions then, but like I said, we are going to be. Have we got one in the room? Fantastic.
I think it was just going to be supplementary to that, really, in terms of policies, procedures, etc., in light of changes to those handbooks, is we do that on an annual basis. But we might refer to them rather than at the start of the document, rather than actually on individual points in terms of how they meet those. So our regulations are slightly more generic, but make reference to those documents. But it's all about best practice at the end of the day.
What I've seen a couple of trusts do already is their CFOs have kind of done a summary document, and it's quite handy. You know, they've just picked up from the front section of the handbook, the new handbook. Right, these are the changes, and they've done a very quick self-assessment paper based on those changes to say, right, we and published that to the audit committee and the board, and said we need to adapt our policies for this and this one we're okay, this one's not applicable, this one's just a nice to know or a good to know, and have done that. So I think as well for your boards and audit committee, that's probably a useful exercise to do. And we'll pick up on that point that Phil said. We'll give you a little bit of an idea as to what you might then need to go in and amend going forward.
Fantastic.
Okay, so if there's no more questions, so we've had over 70 people virtually logged in today. So thank you all for coming in, and hopefully you've learned quite a bit this morning. Keep in touch. Don't forget to fill out your feedback form, and feel free to have a wander around the various virtual rooms and catch up with people. So hope you all have a good rest of the day, and have a great day, everybody. And thank you very much. Bye.
Great, thank you.
Thanks.